There are some American companies that are so strong and so well managed that their stocks are worth buying into any meaningful pullback. Stocks like longtime Cramer fave PPG, the specialty chemical company that makes all kinds of proprietary coatings and paints. PPG's been chugging its way higher for years under the leadership of its CEO, Chuck Bunch, one of my 21 bankable chief executives from Get Rich Carefully. And we've heard him many times via satellite. Tonight's a treat, though, because Chuck's in studio. And I'm delighted to bring him on to hear more about what he and his great company are up to. Chuck, welcome to Angle with Cliffs. Have a seat.
Hey, thank you. It's great to be here.
All right. You have reinvented this company in a way that I think very few people, a lot of people have tried and haven't been able to. I'm looking at a chart here. 2004, you were all sorts of different chemicals. Now you're only in the highest valued chemicals. How did you see it coming? Because other people are frantically trying to catch up with you.
Well, we were historically more diversified, but in the late 90s, we saw coatings as our best opportunity, our biggest, best businesses, technology, innovation, and very consistent cash flow and earnings. So we said, let's focus here and let's make some tough choices, but move and get bigger. Now we're the #1 player in the global coatings industry.
And this market, this paint market, you did Akzo Nobel, which was terrific in 2012. This Comex acquisition in Mexico, one of the fastest growing countries on earth, paying off already.
Yes, we've owned them now 6 months. We closed on the deal last November. They're off to a great start, high single-digit sales and earnings growth. We're really pleased with the opportunities. It'll build on our automotive and industrial platform there. So we're really pleased to be part of this long-term growth story.
And people have to know it's an American company that makes the coatings for those foreign cars that everyone's so gaga about, right?
Oh, yes. We're a key supplier to many of the global brands, BMW, Mercedes, even the Toyotas, all the players globally. We're involved in supplying them.
Now, you on this most recent conference call were one of the few executives that actually said, listen, China business is good because it's domestic car companies, and you used the term encouraged about Europe. Sticking with that, it's been almost a month now since you spoke.
Yes, what we see one market, the automotive OEM sales market in Europe, has really taken off these first 3 or 4 months. Now, our sales typically come with the builds. That's trailing a little bit, but we're really encouraged. High single-digit growth in automotive OEM sales in Europe. We think this is the start of something now much better. We've had a few false starts in Europe, but we think now with the low interest rates, the QE, lower oil prices, weaker euro, it's going to set the stage for further growth.
You did something very novel. Only a couple companies have done it. You did a $1.3 billion euro-denominated bond. What, 1%? You've cut your interest bill down dramatically in the last year.
In half. The European interest rates are very low, so we thought this was the best time to position ourselves. Some longer-term 7- and 12-year debt, a little over 1% rate. It is a great time to borrow money in Europe. We think it's helping us, but it's also going to help the economy there.
We've been watching the dollar, and we think it peaked. This is my view on the show. A lot of people still feel the dollar's got to go way, way higher. But if it did peak, you would have a dramatic change in the actual numbers that you report, right?
Yes, we were facing a little bit of a currency headwind the last quarter, especially with this stronger dollar. We've seen the dollar pull back a little bit over the last few weeks. It was almost at 105. Now it's closer to 111, 112. That helps us. That'll strengthen our translated sales and earnings, should position us better if we've seen the peaks in the dollar and it gets a little weaker from here.
I can point out some people probably think that paint may not be that intelligent a business, but I'm looking at your R&D expenditures, $509 million. You've taken up R&D rather radically, even as you've cut costs out of the company.
Right, because we're still an innovation and technology company at our heart. And if you look at our big customers, these are in the aerospace, automotive, marine. These are key markets where they're looking for technology to help them save energy, to better protect or beautify the assets. So we think innovation has a real role. We're the innovation and technology leader in terms of expenses and for all our business, including architectural. So we think it's an important part of our strategy going forward.
Well, I was going to ask you about the last one, North American architectural, because you have a good read. And you were conservative. People have to know, when he says that Europe is encouraging, that's meaningful. North American architectural, we've been worried. How do we feel?
Mm-hmm. I feel good about the market. It was a little weaker in the first quarter. We had a little patchy weather there, especially from mid-January through mid-March. But the overall trend over the last few years Commercial construction now is improving. Residential has been coming along. It's not gangbusters, but it's solid growth, and I think that'll continue this year as the weather picks up here in the spring.
Okay, now I have a lot of individual investors who have bought this stock because of you coming on regularly. I typically don't want to say that a split implies more value, but you are doing a 2-for-1 split in June, make the stock a little more liquid.
Yes, we are, and we think that'll help liquidity principally. So we have a 2-for-1 split coming next month.
But at the same time, you've been a continual buyer of your stock, 165 million shares down to 137 last 5 years. And it sounds like your capital allocation, I know you're always on the lookout for acquisitions, but you're going to be continuing to bring in stock.
Yes, we have a good cash flow generating business model for PPG. And so we have cash to deploy both in acquisitions and share buybacks. We did $200 million of buybacks in the first quarter. We're continuing now. But as you know, we've continued on the acquisition program, Comex, and then we followed it up last month with the Revicoat, an automotive OEM adhesives and sealants player. We have another one announced in aerospace coatings for the third quarter. So we're continuing M&A, but we're supporting the stock with buybacks, and that should continue.
Well, you have had the most consistent of the cyclical companies that we've had since we started the show. That's Chuck Bunch, Chairman, CEO of PPG Industries. You see why I like PPG so much. It is just consistent and reliable. So's Chuck. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.